What's going on, everyone? So, a pretty quiet day. I didn't really alert much. All we did was the calls that we were holding overnight. We sold those for 50 to 60% at the morning, and that worked out really, really well. All of us essentially made a lot of money, so that was really good. And essentially, at the end of the day, I basically said that I was buying into SPY and IWM calls for about 30 days out, but no real conviction and a very small position size. And the reason for that was because the markets are basically at a very, the markets really just need to make a decision at this point. And me being a bull at the moment, I'm just going to continue to always lean long at the moment until we see a complete shift in the macroeconomic changes from the Fed. So right now, in today's video, we're going to go over the SPY, we're going to go over the NASDAQ, we're going to go over the IWM, the 30-year bonds, and the crypto markets. So without further ado, let's get started with the video. First things first, Apple completely beat earnings. So that's going to be really good for the NASDAQ and the SPY. And you can see that it's up almost $8 in the after hours. And essentially, they had the most sales that they've ever had in a month, I think. And they basically just beat all earnings expectations. So this is really, really good for the overall market. Apple being bullish for the market is very bullish overall for the market. So, yeah, there's that for Apple. Let's go ahead and take a look at the SPY. So for the SPY, the reason why I was essentially leaning long and why I'm still bullish essentially is because technically now we closed, we made 4 higher lows. So consecutively we made higher lows here. And, technically we are looking pretty bearish. But the thing is, when the indicators look this bearish, it's very, very unlikely that the market will capitulate, because when things are this bearish looking, when the MACD is moving upwards, yet the price is moving downwards, yes, technically this is very, very bad. If you've been following my videos for, any time, you would know that if the MACD, first of all, for the SPY right now, price is falling, yet the MACD is moving upwards, that is a warning signal, right? Obviously, that's very bad. The RSI oversold, right? Yet the MACD is moving upwards, that's another bad signal. And the lower level of the Bollinger Bands are basically puking to the downside. Those are 3 major, huge, terrible signs. Also, we closed below 2 major fib levels, all right? So there's nothing bullish about this chart. So essentially, what tends to happen is when there are really, really multiple reasons to go bearish, and it's really too good to be true sometimes, it pays to go long. And another reason why I wanted to go long is because I had a feeling Apple would report decent earnings, because all of these other larger tech stocks reported decent earnings as well. So Microsoft, namely, had a really good quarter as well. So I had a feeling Apple would have a good quarter as well. So I didn't have strong enough conviction to alert, hey, I'm going long here, but it was worth taking the risk. And currently it looks like that's going to be up. Who knows what's going to happen by the time we open, right? Who knows what's going to happen in China and Japan? Who knows what's going to happen abroad in the various different markets? But at these lows, this is completely against what I've been saying. This is a completely bearish scenario for the day, but I bought into very, very cheap calls, because when things look this bearish, it's almost too good to be true to continue falling. Because if we fall right now, this is going to hit, way past below these lows, and it's going to have a very big capitulation to the downside. And I don't know if that's going to happen. It's very unlikely that that would happen, in my opinion. So the main reason why I just bought a very, very small amount of calls on the SPY and the IWM is because technically we closed and made higher lows. All right. Everything else is super bearish. But, so far, it was just like a 50-50 toss up. And so far, whoever took the calls are lucky, because Apple had good earnings. All right. So truly, there's that for the SPY. When things are this bearish, when sentiment is this bearish, when things are just that, it just looks too good to be true to continue not going to the downside, you know, pays to be a skeptic sometimes. So, I mean, but I didn't alert anything. So, yeah, there's my analysis for the SPY. Let's go ahead and take a look at the IWM. So, the IWM, the reason why I went long is because we basically closed, well, technically we closed below this level, right? But because we had a major, like we basically broke the prior low from January 24th. And what usually tends to happen is if we were to rally, right? What happens is, for example, back in early December, we had a low, and then we ended up breaking down below that low. And this was essentially the bottom for the market. What I was thinking to myself basically this entire time was I would love for the market to break down below this level once more so that I can go long, because that would have made a lot of people lose their stop losses, and it would make a lot of retail get shaken out. And from here, people would start going short. So once everyone essentially goes short, that would be a really good opportunity to go long. But again, it was a complete shot in the dark. But yeah, I mean, so far it's working, but who knows what's going to happen in the morning. But essentially, the level of support that would really need to hold for the IWM tomorrow, or the level of resistance, is going to be approximately 181.84. This is a very, very important trend line. And I've been monitoring this for quite some time. This is a very, very important trend line. The fact that we came back and retested it is a very good sign, in my opinion. But if we start to break down below, this level will be a good level to go short against and basically have as a resistance level. So essentially, if we continue on higher, we need to break above 195, and then we can continue on breaking 197 and then hit 200. But also, the other good thing about the IWM is that the indicators are actually pointed downwards. So it's not like the SPY, where the SPY's RSI is a bit stagnant. The RSI is clearly pointed downwards, and the MACD is clearly sharply falling downwards as well. But the price of the IWM is lower, yet the MACD is still higher. All right, so that is that's still very, very bearish. So at this point, really, the market could go in either direction. We need to see a definitive directional change in the market for me to become, confident enough to alert plays for you guys. But, this support touch and the fact that we broke down below the lows, I thought it was a good sign to go long. Also with Apple's earnings, but this MACD is bearish, and also the same thing with the RSI. The RSI is still lower than where we were currently. So technically, everything still looks really, really bearish. I guess I'm just lucky that the market is up right now. So yeah, there's my analysis for the IWM. Let's go ahead and take a look at the tech sector, the 30-year bonds, and the NASDAQ. All right, so one of the reasons why I was adamant about being bullish overnight is because the largest tech stocks were green when the entire rest of the market was red. So when the SPY was red, when the NASDAQ was red, and when the IWM was red, Apple was still trading green. Microsoft, Google, Amazon, all of those stocks were still green. So I was like, if these are the largest tech companies in the world and they're still green when the rest of the market is red, I'm going to take that as another good reason to go long. So Apple, we already went over. Take a look at Microsoft. Microsoft held this level of support perfectly at 297.97. And the next level, that needs to hold is 300.9. Clearly, it looks like we're above it. But right now, this indicator is moving upwards. It's basically overbought now. Sorry, and the RSI is also very dramatically going upwards. But I saw the strength intraday, and you can see that we closed green when the rest of the market was closing very red, right? So I saw the strength in Microsoft to be a good indication of potentially us, going on higher. Let's take a look at Google. Google barely closed red, right? And we were green intraday as well. And you can see that the MACD on Google still has not yet crossed above, and the RSI is stagnant. So, the fact that I saw the strength intraday in Google as well, we're over here at a major level of support at the 2580 level. The next key level of resistance is going to be up here at 2660. That's a long ways away. But the fact that we still have not crossed up above yet on the MACD is a very, very good sign for Google. Also a $1 trillion company, obviously, right? Amazon closed green. You know what I'm saying? So you can see the RSI is super oversold still, and the MACD is super oversold. So that means that there's still tons more room to the upside. So I saw the strength intraday in all of these large companies. Clearly, closed green or almost green on all of them as well. And another thing is that I saw strength for the 30-year bond as well. So this is the next day's candle for the 30-year bond, but we closed very green. So I took all of those different things into account, and I saw the strength. And essentially, that's why I was swinging calls overnight. But, right now, the 30-year bond clearly did not close above 155.14. It's a very, very important level of resistance, and we literally closed right below it. So obviously, that's not the best sign, but this is a good green reversal for the day here. Obviously yesterday we had a huge red day, came back and retested this level of support. Today, huge green day. So it's a good sign, in my opinion. What is, now at this point, that the fact that the Bollinger Band is really starting to come down very quickly here, what I think is going to end up happening is we might continue stagnating between these levels here. And then as the Bollinger Bands tighten up more and more, there's going to be a very aggressive move either to the upside or the downside very soon on the 30-year bonds. So at this point, I don't know which way it's going to go. But when the Bollinger Bands tighten up like this, it's a very, very strong signal that soon, we could squeeze either to the upside or the downside. So obviously, depending on the equity price and depending on how the Bollinger Bands and like where we close above on the resistance for the 30-year bonds, it's going to be very important. And we know that if the 30-year bond is bullish, then the NASDAQ and the overall stock market are also bullish. So we have to take this into consideration. We have to continue monitoring what is going on with the 30-year bonds. That's really it. So now let's go ahead and take a look at the NASDAQ here. All right, so here's the NASDAQ. On a non-log chart, we were sitting at this very, very important level of support, a very, very important trend line, and multiple levels of support here, obviously, right? On a log chart, that trend line is not there, but essentially, I wanted it to, we held these levels of support so well. I saw that the SPY and the IWM were both somewhat in a good bullish environment, and then I also saw that Apple was going to have earnings, and Microsoft had positive earnings. Tesla also had like decent earnings. They had a good run up. So the other thing is that, all right, so the main thing right now for the MACDs on all three major indices is when the yellow line is very, very far extended below the 0 level, right? This moving upwards is not as big of a deal. Okay, so usually in the bull markets that we've been having for the past year and a half, 2 years, when we start moving upwards a lot heavier, that's not as bearish. Okay, so again, it was merely a toss-up, and it still is not 100% certain that we're going to open up green. So, but the fact that we held these levels of support purely was a very, very good sign. And the fact that we held this level of support on the non-log chart was also a very, very good sign. So overall, we're still not crossed above yet on the MACD. The RSI is still pointed lower, while the price is also falling lower. So that is the sort of direction that we want to see. When it's bearish is when the price is falling, yet the RSI is stagnant. So if you guys ever watch and see the RSI is just in a straight line here, yet the price is falling dramatically, that means that there's going to be a vomit to the downside. So throughout here, as we were falling very dramatically, the RSI was basically staircasing down. And I was saying that that's very, very bearish. So now the fact that there is sort of sensitivity to the downside as the price is falling lower is a good sign. So we need to just essentially we just need to see if these are going to be the bottoms for the market. 340 held really, really well on the NASDAQ today. And really, I mean, it's a toss-up at this point. There's not really much else to talk about in terms of technicals. And that's really it for the overall stock market. Now, let's go ahead and take a look at the crypto market. All right, currently Bitcoin is green, right? But again, we're keying off of Bitcoin's strength pre-market to determine the strength of the overall stock market pre-market. All right, because right now there is a very strong correlation between Bitcoin's price and the stock market in general. So right now it's strong. We can see that the MACD on Bitcoin is below the 0 level, and we are now crossing above on the MACD, which is a bullish sign. So it means that, we should be continuing on upwards. But what needs to happen now is Bitcoin needs to break above 37.8, and then it needs to break above 38,100. As this is happening, we need to see some sort of really reclaiming levels of resistance. If we can cross above these levels of resistance on Bitcoin and close above, then the stock market should, start rallying as well. And essentially then we would see a bullish move. And the RSI, you can see, is stagnant here as Bitcoin's price is sort of, it's stagnant. But we need to see now which direction the RSI is moving. This could be very, very bullish because we are reversing off of the lows. And the fact that we are stagnant on the RSI while we're bouncing off from these lows could be a very nice explosive move to the upside. So, again, it's sort of not as clear right now because we are consolidating very, very heavily right now. We can clearly see that we're consolidating. Looking at this chart over here, it's way more cleaner. And I know it's just so hard to tell right now. But yeah, essentially we need to break above the key levels of resistance, and then that will determine which direction the overall stock market and which direction the overall crypto market is going to go. So really, ideally, what I want to see is for us to retest this low here. But if Bitcoin were to retest this low here, that would mean that the SPY and the overall stock market would also fall, and the SPY would most likely break below 420 at that point. So it's really, again, everything is at a toss-up at this point in the market. There's no clear, definitive direction for the market in the short term. So that's why it's much better to just be patient and wait for a key level break on the stock market, a key level break on the overall crypto market. And I'm not sure if I mentioned this already, but the SPY needs to break above tomorrow. We want to see it break above 443 and 443.50. We want to see it close above those levels. If we can see it close above those levels, I will be much more comfortable going long. But yeah, aside from that, there's my analysis on the overall stock market. I hope you guys enjoyed today's video. Make sure to follow me on Twitter. I post everything there completely for free. Yeah, that's really it. I will see you guys tomorrow. Thank you.